Morning, everybody. Thanks very much, Adrian. Nice to have the young chap back. Plenty to give you listen to a different voice, really. I know how monotonous it can be listening to just one. Hi, Cliff, Tony. Hi, how's all? I'm sure you're all wondering what the hell has been going on over the last couple of weeks. Not been easy to trade. I think all of us know that these political events, economic events, and they're pretty important stuff. They have been very important stuff, I should say. Really, if you sort of review what's gone on over the last week on its own, the FTSE is up over 2%, gold's up sort of just under 2%. The euro, well, it had a massive move, as we all know. I mean, let's just get the euro up here more quickly. So you can see here we had a rise of probably 3.5 cents last week. What's that? That's about just under 3%. That is a big move in terms of Forex. I mean, we were talking in the workshop on Wednesday about targeting that 130.50, but it just goes to show you why or how a big move like this actually can really overshoot. And I think it probably has overshot a little bit, but I'm not saying it's a short at this stage. But I think the pendulum has swung a little bit too far on the upside for now. But it just goes to show you actually how short a lot of participants were of the euro and how they've had to scramble to cover their shorts. And a bit like in the equity markets as well, we saw the reaction last week, very much suggesting that a lot of participants were short or underweight. I know a lot of money managers were scrambling to cover their positions, which exacerbated the move. But anyway, here we are for a new week, and I think the euphoria from the party news from last week will start to die down. We had, as everyone knows, the previous week, not last week, the previous one to that, we had Mario Draghi announcing his unlimited bond buying program. That was on that Thursday. Last week we had that fantastic the Constitutional Court from Karlsruhe. I love saying it, and I thought I'd get one of those in. And then we had, which was a pretty, obviously dollar bearish or more to the point, euro bullish. And then we had that followed up by the FOMC, that's the Federal Open Market Committee on Thursday. And they have really opened the floodgates, by having this open-ended quantitative easing, which is a pledge to continue until the labour market improves. Effectively saying that wherever there is a weak economic data, the market will assume a continuation of quantitative easing. So all very negative for the dollar, and I know the Republicans have been up in arms. This is a Democrat government, as you all know. Ben Bernanke. We know that Mitt Romney, the Republican challenger, has already stated that he would not reappoint Mr. Bernanke. So the Fed and Mr. Bernanke really are probably doing all they can to help the economy and improve employment prospects, because it's a dual mandate. And I think it's likely that if it doesn't succeed, Mr. Bernanke is probably out of a job. Anyway, that's a summary of what's going on at the moment. Let's have a look at the economic calendar. If we go to Trend Signal, there's an economic calendar button here. I just launch it in a new tab. So here we've got the economic calendar for the rest of the week. A lot of red high impact bits of data, but they're not all that important, not all as important as each other, I should say. The nice thing about this calendar, obviously, we can see the key events. So I'll just go through them one by one just to cover off on what are the key ones. Obviously, for a lot of you who are attending this for your sort of first or in fact your second week now, or third week, you'll know that there's a stack of data that does come out, and it sometimes can be quite confusing. As you go from one month to the next, you'll realise what are the important bits of data, because they repeat themselves monthly. All this is monthly data. Some of it's weekly data, but we'll just go through it now just to cover that off. Starting with on Tuesday, the most important bit of data actually is our CPI data. That's the Consumer Price Index and the Retail Price Index. This is our inflation data, obviously very, very important. This is the data that was persistently high, right up at 5%, and has been falling quite sharply. Unexpectedly in July, the number actually jumped to 2.6% from 2.3%, 2.4%, I should say, the previous month, and I think that was down to sort of transportation costs, etc. But we actually are calling for a slightly lower reading on that, so 2.5%. Remember, if you're trading anything to do with FTSE or any of the sterling crosses, that will have an impact. So 8:30 Tuesday, please be aware. For all you Euro traders, we then have later on Tuesday at 9 o'clock. This is the ZEW Economic Sentiment Indicator. If you want to see the detail, if you can just click on here, Open Detail, you can read exactly how this works. It's a diffusion index based on a survey of German institutional investors and analysts. Its number, putting it simply, anything below naught is pessimistic, anything above naught is optimistic. Last month we had a very, very poor reading of minus 25.5, which is the lowest reading this year. I think a lot of people now assume that the German economy is slowing and will slow down in the coming months. Being a forward-looking index, obviously this still paints a fairly gloomy picture, even with an improvement to 19.4. But anyway, it is a slight improvement in terms of the pessimism, if you can look at it that way, from minus 25.5. Overnight on Wednesday, so early Wednesday morning, and sort of 3 o'clock in the morning, we've got the Bank of Japan and its monetary policy meeting. We're not really expecting anything. No changes forecast, but it is important because sometimes they do comment about the currency and its strength, the strength of the Japanese yen. So watch out for any policy announcement there on that. Obviously, I don't think a lot of you are trading at 2, 3 o'clock in the morning, but you never know, just in case. There has been a lot of action there, so do watch out. Next, Monetary Policy Committee minutes. This is the minutes from our Monetary Policy Committee. This was the meeting held earlier on in the month, and it's quite interesting. So we can then have a look at these minutes to see, what the thinking is on the committee about economic stimulus. Last, at the meeting, we were expecting there was a possibility of a rate cut. There's a possibility of further QE, but I think with all the ECB and Federal Reserve stuff going on, the committee decided to hold pat. So that is something that could have an effect on the sterling markets again. So please be aware, 9:30 Wednesday morning. Right, the next bit of data, let's just move on, is on Wednesday. Let's just move on to Wednesday. Yes, in the building permits and housing starts. Building permits are a big leading indicator of the housing market. We continue to look at the housing market. It is important. The market focuses on it, so we have to focus in on it. Yeah. So this is the number of building permits. So the building permits are a leading indicator to housing starts and new home sales. So that's something that we'll watch very closely. Followed on, actually, at 3 o'clock by existing home sales. Again, an important indicator of the strength of the housing market. We continue to underline how important the housing market is in the States. Each new house that's built results in the employment of 5 people, albeit on a sort of a temporary basis, of course, but it does have a big effect on the employment picture. Next, we've got a couple of things out. We've got, I think, with the UK retail sales. Let's just have a go. Look, I haven't missed that, have I? Yeah, at 9:30 on Thursday, we've got retail sales. That's important, obviously. We did have a bounce in the previous month, but we're looking for a little bit of a slip back there. Retail sales, obviously, that may be something the MPC will be aware of, and perhaps particularly weak data may tip the MPC in its next meeting next month into perhaps engaging in more QE. Then we have the weekly unemployment claims, very, very steady. Just so you know, that's something that we should focus on. Philly Fed, now this is probably one of the more important announcements during the week. This is a measure of manufacturing activity. Oops, sorry. Just trying to highlight just one rather than the whole page. This is a level, manufacturing index in one of the big manufacturing stakes, Philadelphia, and that is keenly watched. You can actually get a heads up on this. They have one earlier on in the week called the Empire State Today. It's less significant, but that could cause a bit of a ripple. But really the key one is Thursday in terms of manufacturing, which is the Philly Fed, standing for the Philadelphia Federal District. What else have we got? Yeah, one thing I forgot to mention, I think, we've got Mario Draghi talking. I think he's talking on Wednesday. That'll be something that may cause a few ripples. I've neglected to mention that in the past, but Mario Draghi and his comments can have an effect on the market. And then finally, I don't know whether Adrian's mentioned this to you, for all you equity traders, whether you're trading indices or whether you're trading individual equities, we have something called the quarterly expiry this week. Hands up for those of you who know what the expiry means. Hands up if those of you who know that, in fact, in the States, it's called not just the triple witching, but the quadruple witching. Can be an event. I think the markets have learned how to deal with it, but several years ago we have seen some very, very big spikes. But it can cause a little bit of inactivity in the markets in the run-up to this expiry. So, again, just something you just have to get used to. Good luck with your trading this week. Little bit of maybe a bit of backing and filling after these big moves over the last few days, but let's see. No idea, Tony. Well, triple witching is when the indices roll over. It's when the options on the futures expire, and it's when the options on the cash options expire as well. So there's a lot of movement in terms of big institutions. If you think about it, Tony, they have to roll their positions from September, which is the expiring month on Friday or Thursday evening, as it turns out, into the next month, which is the December quarterly contract. So we trade the 4 quarterlies: March, June, September, and December. This event happens 4 times a year. You'll be surprised to hear. But anyway, listen, enough of that. I know Adrian's itching to get going again. Thanks for listening. Good luck with your trading, and I'll just put you on hold now for a second.